Michael Pettis, The Great Rebalancing, Trade, Conflict, and the Perilous Road Ahead for the World Economy, Updated Edition. In the updated edition of The Great Rebalancing, Trade, Conflict, and the Perilous Road Ahead for the World Economy, Michael Pettis delves deep into the consequences of the U.S. government's response to the Great Recession of 2008 to 2009. Highlighting the Great Reflation and the uncertainties surrounding the nation's long-term economic prospects, the book explores the historical context of currency delinking, inflation, and potential disasters due to vast public and private debt. This summary will guide you through key insights on asset allocation, investment goals, risk tolerance, various investment options, and appropriate strategies for wealth preservation in a changing world.
The Great Reflation. The U.S. government's response to the Great Recession of 2008 to 2009 succeeded in averting another Great Depression, but it also raised concerns about its long-term effects on the economy. The massive spending on bailouts, stimulus, and tax credits created excess money, which could lead to inflation and financial bubbles. The government's efforts, dubbed as the Great Reflation, means eventual instability due to huge public and private debts, a shaky world economy, and a suspect dollar. To place the U.S. on a stable path, wise and perhaps painful economic and political decisions must be made in the coming years. As an investor, it is crucial to monitor certain signals to make investment decisions that preserve your capital. The Perils of Fiat Money. This book's summary discusses the historical implications of nations delinking their currency from gold, resulting in hyperinflation, deficits, and credit implosions. The Great Reflation aims to encourage asset prices to improve corporate and personal balance sheets and stimulate economic growth, but rising prices could lead to significant inflation. The U.S. is converting private debt into public debt and is headed towards post-World War II levels of debt. As U.S. citizens try to pay down their debts and reduce spending, the government attempts to encourage borrowing and spending, leading to a delicate balance between tightening interest rates too early and not tightening soon enough. The Federal Reserve must act as a vigilant inflation fighter to prevent significant inflation. The Great Reflation Experiment, Navigating Uncertainty. In the aftermath of the Great Reflation experiment, change is the new norm in fiscal matters. To preserve wealth as an investor, planning, caution, and sound judgment are crucial. Resist the temptation to follow the crowd, as the money injected into the system will create short-lived booms in certain categories, which can ultimately be hazardous. Identify your financial objectives, tolerate calculated risks, and determine your investment horizon. Liquidity is particularly vital for short-term investors. Determine which assets to hold, the required proportions, and when to execute changes. Asset allocation, diversification, and understanding the correlations of holdings are vital investing principles. America will eventually recover, but the duration, potency, and speed of recovery are unclear. The allocation discipline will guide you in selecting and securing your investments. Diversifying your portfolio. Investing in equities, bonds, commodities, and real estate can offer a diversified portfolio. This summary highlights the essential factors to consider when investing in each asset class and their potential risks and rewards, including indicators to decide when to increase or decrease exposure to equities, assessing bonds' value and credit quality, monitoring interest rate trends, the role of the U.S. dollar, and the potential benefits of commodities and real estate investment. Are you looking to diversify your investment portfolio? Investing in equities, bonds, commodities, and real estate can offer exposure to various asset classes with unique risks and rewards. However, selecting the right investments with the proper returns can be challenging. In this summary, we'll highlight essential factors to consider when investing in each class of assets and their potential risks and rewards. Equities, for instance, can generate returns through value increases and dividends. Over a 10-year period, they offer greater returns than bonds, with less risk. Though bear markets have, on average, shown a 37% decrease, bull markets have demonstrated a 114% average increase over the past 174 years. To ensure optimal investment in equities, employ 4 tools to decide how and when to increase or decrease your equity exposure. Before investing in equities, take note of market indicators such as yield curves, bank liquidity, corporate lending, and bond rate differentials. Many investors consider bonds a safe investment choice. While prudently chosen bonds can add stable income to your portfolio, you must assess the bond's tenor and credit quality before you invest. Treasury bonds provide risk-free, albeit low, returns. Corporate and municipal bond returns depend on their issuer's credit rating. Bond investors should monitor interest rate trends to determine if inflation is approaching. In some instances, Treasury inflation-protected securities, TIPS, can offer a hedge against inflation. Diversifying your investment portfolio includes investing in commodities. People consume commodities such as oil, coffee, copper, and pork bellies, and they need to be replenished, making them an attractive investment. While commodities can be volatile, they offer a compelling short-term case due to the dollar's weakness, increasing demand from developing nations, and the diverse range of commodities available. Index contracts, funds, and ETFs let you participate in the commodity market without physically holding the product. Real estate can provide a valuable investment opportunity and can be a substantial asset. With many houses on the market due to the growing number of aging people selling their homes, and with the prospect of an oversupply of houses, owning a home's only benefit will be having a roof over your head. However, diversifying your portfolio with real estate investment trusts or real estate crowdfunding platforms can offer viable opportunities. Lastly, the value of investment in the US dollar cannot be overlooked. As the planet's reserve currency, the world will continue to invest in dollars, despite its losses in purchasing power and valuations against gold and commodities. It's essential to assess the potentials of investing in each asset class and evaluate your investment goals before diversifying your portfolio. The path to American renewal. The U.S. financial and political failures have been exposed by modern economic upheavals. Despite the Great Reflation mitigating an immediate financial meltdown, the U.S. public debt continues to burgeon, reducing its flexibility. With an aging population, almost twice as many retirees will be supported by workers by 2050. Manufacturing no longer plays a significant role, and America's renewal lies in restructuring its economy by investing in leading industries such as technology and energy, reducing its debt through cost-cutting and judicious tax increases that don't inhibit growth. Investors should consider equities in commodity-producing nations, and small companies with cutting-edge alternative technologies.
The Great Rebalancing sheds light on the intricate and unstable road that lies ahead for the world economy, shaped by the aftermath of the 2008 to 2009 recession response and the Great Reflation. The summary of this book elucidates the need for wise, albeit challenging, economic and political decisions in the coming years to steer the global economy onto a stable course. As an investor, you must understand the importance of wealth preservation, proper asset allocation, risk tolerance, financial goals, and timing of your investments. The summary showcases valuable insights on various investment options such as equities, bonds, the US dollar, gold, commodities, and real estate, as well as vital strategies to protect and grow your capital in these uncertain times.